Good morning, you're watching Market Cafe on ET Now with me, Somit Sarkar, and my co-anchor, Ankita Saxena. First up, let's go across to the US markets, Ankita. Headed for a weekly losses?
Absolutely, Somit. Today's Friday and we're headed for weekly losses. The sell-off continues. Stocks stumbled yesterday as banks and other financial stocks sold off, and the investors are bracing themselves for a key payroll report that's due as of today, and that could really shape the direction of interest rates going forward. The S&P 500 slid 1.8%, while the Dow Jones Industrial Average dove 543 points, down more than 1.5%, and the Nasdaq Composite shed 2% in trade yesterday. Somit, so clearly there is no stopping of this sell-off for now, and we are clearly headed for weekly losses. Now, the Dow closed below its 200-day moving average for the first time since November 9th. And for the week and the year, the 30 stock index is down 3.4% and 2.7% respectively. Both the S&P and the Nasdaq are up 2% and 8.3% in 2023 respectively, but are on track for weekly losses of 3% or more. If you look at the European markets fell moderately yesterday. The Pan-European Stock 600 provisionally closed 0.1% lower, largely flat, but in the red. FTSE closed down more than 0.5%, and CSE was down 0.1%, largely flat. DAX was also flat, however, ended the day in the green, marginally in the green, but largely flat. So a mixed bag coming in from the European markets. What about crude, Somit? Take us through where the crude is at on Friday.
Well, Brent crude prices, if you see, they have been continuously declining for the last three straight sessions, and yesterday it slipped by around 1%, and this was on increased worries that the US Federal Reserve may go too far with its interest rate hike to control inflation, which could actually put the country or the world into a recession and thereby impacting the future oil demand. Now, currently, if you see, Brent crude is trading around the $81.6 per barrel mark, and this is the third straight day of decline. And so far, if you see, Brent crude has declined by around 5%. However, when we come to gas prices, again a third straight day of decline, but the declines were marginally lower compared to what we have seen earlier. And yesterday's decline was largely on the back of the fact that the inventories are rising. So because of excess supply or excess surplus in the market, gas market that we have been seeing, we are seeing a decline when it comes to gas prices also. Singapore gross refining margin, they remain largely flat around $7 per barrel mark, while gas prices in Asia also remain largely stable at around $13 to $14 per MMBTU mark yesterday.
All right, and let's quickly take you through the events that will take place as of today. We have the Indian industrial production data that's likely to come out today. Also, for Ajanta Pharma, there is going to be a board meeting to discuss the share buyback. And for HAL, we have the board meeting on to discuss their interim dividend announcement. And of course, amongst the other events, we have the Amphi data that's likely to come out. We have the Amazon future retail dispute. We'll have some news on that. And of course, India and US will be holding a commercial dialogue as of today. So these are the events that we will be keeping an eye out on. Somit, take us through what are the news that's making global headlines.
Well, the important coup that the street had been waiting for is the US initial jobless claims, which have hit a 10-week high of 211,000 versus 190,000 that we had seen in the previous week. Now, this is signaling that the labor market might be losing its ability to defy gravity. Now, on that, let's listen to what Greg Earlham and Sharmila Whelan had to say.
The Powell and the Fed are very, very much focused on inflation and getting it below 2% or towards 2%. And the things that are concerning them that more than overwhelms any softening in the labor market are two things. One is the personal consumer expenditure price index. For January, the readings were showed an acceleration both in the headline and the core. And within that, if you look at services, there's no deflationary pressures coming through there on the core services. That's number one. Number two is wage growth and the tightness of the labor market. Wage growth has slowed somewhat, but the Fed is very clear that this is not consistent with their inflation target. So to me, it's the softening of the labor market is not going to cause the Fed to reverse course on what they've said earlier this week in the Senate hearing.
This political back and forth happens and can happen for many months. We see the Treasury going to find extraordinary ways in order to try and survive a little bit longer. And as the deadline approaches, the two sides come together and a solution is reached. It's all about trying to maximize the leverage ultimately, especially for the opposition party. And therefore, I don't think either side is actually seriously considering allowing this to pass. The Fed chair has warned that they couldn't limit any overspill that happens as a result of it. But also, I just don't think the US, in the longer term, has any desire to allow that to happen, and that's Republicans and Democrats alike. So I think we should try and ignore the public back and forth because neither side has anything to gain by letting this happen.
Right, and shares of Silicon Valley Bank plummeted a whopping 60% after announcing a $1.75 billion stock sale, pushing the market capitalization to just above the $6 billion mark. The move dragged other banking names. The S&P 500 bank tumbled 6%, the biggest single-day decline in over 2 years.
Well, the US President Joe Biden fires a $6.9 trillion budget proposal, cutting deficit by nearly $3 trillion. Now, the president is also proposing a 25% minimum tax on the billionaires as part of a series of proposed taxes hikes on wealthy individuals and corporations. Now, Biden's spending plan would also nearly double the capital gains tax for investment from 20% to 39%.
And amid flaring concerns around energy security taking center stage, the OPEC chief has said that considerable investments are needed in the energy space to meet rising global demand and ensure market stability. Also, emphasis on the need to transform and decarbonize operations.
Well, after a dismal response to Marvel's latest Ant-Man, which has logged just $420 million after a 3-week stand at the box office, Disney CEO Bob Iger has questioned finally the Marvel's universe sequels. Says he wants something new out of the MCU universe. Now, Iger says it's time for newness from the franchise.
An important news flow from the US, where New York City prosecutors have indicated that former President Donald Trump could face charges for making hush payments to adult film actor and director Stormy Daniels.
Well, General Motors has announced a voluntary buyouts to as many as 58,000 white-collar employees with a view to slash nearly $2 billion in structural costs over the next couple of years. Now, the company expects to take a pre-tax charge of up to $1.25 billion related to these buyouts, according to the public filing. The charge is expected to be all cash and occur in the first half of the fiscal.
And on to geopolitics, Russia has fired a wave of missiles across war-struck Ukraine, killing at least 9 civilians and knocking out power in the capital city of Kyiv. The mass strikes was the first such wave since mid-February, shattering the longest calm since Moscow began its campaign to ravage Ukraine's infrastructure 5 months ago.
And in the neighboring country, it seems like the clock is ticking for the former Pakistan Prime Minister Imran Khan. After many attempts at dodging the law, the Lahore Police today booked him and 400 others on charges of murder and terrorism. Now, this is after his party supporter clashed with the police personnel during the party's rally that left one activist dead and scores injured. As per reports, this is the 88th case that has been filed against Imran Khan. Police have also arrested over 100 workers of Imran Khan's party, Tehreek-e-Insaf.
And well, the United Kingdom has announced a new law to crack down on illegal migrants. As per the new law, anyone entering Britain illegally will be detained and swiftly removed and sent back to their own country. So what does this new bill entail, and how will Britain Prime Minister Rishi Sunak fend off the opposition? Well, here's an explainer on that.
Immigration. Now, that's one word that has kept European politics on the edge for the past several years. And now it's back in focus as the British Prime Minister Rishi Sunak has unveiled the illegal migration bill. Sunak says the bill is going to help the United Kingdom tide over the immigrant crisis. But critics believe otherwise. What exactly does the bill change, and how is it going to impact the current migration system? Well, as per the British Prime Minister Rishi Sunak, the illegal migration bill is going to stop thousands of migrants who cross the English Channel in small boats to get to the country. In 2022, 45,755 people crossed the Channel in small boats. This year, more than 3,000 people have crossed the English Channel in just the last 2 months. Sunak believes that the bill will stop smugglers, it will stop traffickers from taking advantage of prospective immigrants. The law empowers the UK government to detain and deport anyone who reaches the country by unauthorized means. After their detention and due legal process, they will be deported to their home country or a safe third country. While finer details are still awaited, Home Secretary Suella Braverman has said that people who arrive by boat illegally will be detained for 28 days before they are deported. And once deported, individuals will be banned from returning to the United Kingdom or applying for British citizenship forever. More interestingly, the bill is going to be applied retrospectively, meaning that even those who have already arrived in the United Kingdom could be deported. The bill also sets a cap, a limit on the number of immigrants that the United Kingdom will take in every year.
All I can say is, we have tried it every other way and it has not worked. So I say again, my policy is very simple. It is this country and your government who should decide who comes here, not criminal gangs. People must know that if they come here illegally, it will result in their detention and swift removal. Once this happens, and they know it will happen, they will not come and the boats will stop.
Well, that's what we heard Rishi Sunak say. Not everyone is pleased. The United Nations High Commissioner for Refugees has called the proposed bill a clear breach of the 1951 Refugee Convention. It sees the bill as an asylum ban, one that is out of sync with international law. But Rishi Sunak, on his part, is in no mood to step back. The newly appointed British Prime Minister has vowed to fight any legal challenge to the proposed bill. Sunak has also played down concerns that the bill breached the UK's obligations under the European Convention of Human Rights. But if recent history is any indicator, the Sunak government has its task well cut out. Previous attempts to deport illegal migrants faced hurdles in the European Court of Human Rights. But will the United Kingdom steam ahead this time? Well, not only time, but perhaps the tide in the English Channel will tell what's next.
Well, with that, let's jump into a short break and we'll be back with more news on the other side. Welcome back. You're watching Market Cafe on ET Now. Now, the FMCG arm of Reliance Retail, that is Reliance Consumer Products, is now relaunching the iconic 50-year-old drink Campa. Now, in an attempt to contemporize the drink for the new India, it has been launched in 3 flavors. The idea behind the launch is to promote homegrown Indian brands which have a deep connect with the consumers. My colleague Anurag Joshi is joining us with more details on the same. Do listen in.
The iconic Campa Cola is making a comeback after a gap of over 13 years. Reliance Consumer Products, a unit of Reliance Retail Ventures, is seeking to launch Campa in 3 different flavors, Campa Cola, Campa Orange and Campa Lemon this year. It is a comeback of sorts for Campa Cola, which was last marketed in 2009 and was one of the key brands through the 1980s and 1990s. Initially launched
Well, looking forward to Campa Cola coming back there. Now, even as inflation concerns and supply bottlenecks ease, automakers remain cautious due to the stubborn commodity prices and their impact on the margins. My colleague Shrishti tells us what the likes of Bajaj Auto and M&M have been saying.
While yes, all these auto companies are in focus as we foresee a speed breaker ahead for all these major OEMs on the back of the return of the commodity cost inflation. And not just that, even some companies have started highlighting the same from the likes of Bajaj Auto as well as M&M. Look at the commentary that we are highlighting for you onto the screens, wherein Bajaj Auto has flagged off the commodity cost inflation from the lows of Q3 FY23. They are seeing commodity cost inflation making a U-turn, and not just that, M&M also highlighted that going ahead, although the demand is very strong, but the commodity cost inflation could be a speed breaker for their expansion in the margins. So we just thought of highlighting to highlight how this commodity cost basket is there for you and how you should track, and how from Q3 FY23 lows all these commodity costs have inched up. Firstly, if you look at the RM cost, then 70% of the overall revenue is clearly the RM cost. In that as well, the bifurcation stands wherein metal as well as electronic comprises of 70% of the total RM cost, wherein plastic is 10% and the rest, that is almost rubber, is 7 to 8%. If we look at the inflation from Q3 FY23 lows, then the steel prices, you will be astonished, it's already up 40%. Rubber prices are up anywhere between 6%, aluminium prices are up 9%. So all of these commodity costs have inched up from their Q3 lows, but going ahead, because all these impact with a lag impact, so Q1 FY24 could have a hit onto the margins because of this inflation. And Jeffries also feel that going ahead, the metal prices can continue their rally upwards, so not a great news for all these auto companies.
Well, lifestyle diseases are increasing rapidly among the youth in India, and the cases of all the types of cancer are also increasing. For this, Kotak Life Insurance, under its CSR initiative, has started the initiative of free ladies' breast cancer screening through a mobile van. My colleague Anurag Shah spoke with the MD and CEO of Kotak Life, Mahesh Balasubramaniam, on what is the plan for insurance regulator IRDAI's target of insurance for all by 2027, and how life insurance companies can play a major role in insurance for all.
Well, critical illness and personal accident as part of term insurance has been sold as riders for a very long time. And that's, yes, a natural way of making sure that these covers are taken. Having said that, at Kotak Life, we also have standalone products which can be offered in terms of a health shield kind of a product, which offers some of these things on a standalone basis.
Okay. Sir, in recent Bima Manthan Summit, IRD has given a target of insurance for all by 2027. So, sir, what role life insurance companies will have in achieving this target?
Well, the biggest heavy lifting has to be done by life insurance companies, right? And we are all very aligned with the view of providing insurance for all, the authorities' view, the Government of India's view. So we are all working on mission mode to make sure that each of us do our bit in terms of products, simple products, combination products, which make sure that we are able to cover all the basic aspects of what a person needs in terms of cover. And of course, spreading deeper into the markets in terms of distribution strength and distribution capabilities, using Digital India, using digital stacks and distribution models to make sure that we all reach out to a larger and wider population of people.
And well, it's time for a quick breather. Do not go anywhere. We are coming back with lots more news.
Welcome back. You're watching Market Cafe on ET Now. Straight up, let's go across to Ashesha to give us all the stocks that would remain in focus on the back of the news.
Good morning. So first up, we have Ajanta Pharma in focus, and that is because Board of Directors are going to meet today to consider buyback. So on the back of this, keep an eye out on Ajanta Pharma. Apart from this, Tata Motors will also be in focus, and that is because Tata Technologies Limited, which is a subsidiary of Tata Motors, has filed DRHP with SEBI for an IPO. This IPO will be by way of an offer for sale for up to 23.6% of the paid up share capital of the company. So on the back of this IPO plans of Tata Motors subsidiary, Tata Motors will also be in focus in today's trading session. Apart from that, Krishna Diagnostics, remember this particular counter was in focus earlier in the week as well, because they informed the exchanges that they had operationalized 100 pathology collection centers in Mumbai. Yesterday again they have informed the exchanges that they have operationalized 100 more pathology collection centers for BMC dispensaries and hospitals in Mumbai. So on the back of this, keep an eye out on Krishna Diagnostics as well. Apart from this PSP projects, on the back of an order win, they've informed the exchanges that they've won orders worth 123 crores. PNC Infra will also be in focus on the back of order wins. They've informed the exchanges that they've been declared as L1 bidder for 2 highway projects of NHAI. The bid project cost of this stands at about 2,004 crores. And lastly, IRB Infra and IRB Invit will also be in focus because they've come out with operational updates for the month of February, where total toll revenue for IRB Infra has gone up by 27% on a year-on-year basis, and for IRB Invit, total revenues have gone up by 13.5% on a year-on-year basis. On the back of these operational updates that have come in, IRB Infra and IRB Invit will also be in focus in today's trading session.
Well, thank you, Ashisha, for all those details. Moving on, now, fuel consumption in the month of Feb was at its 3-month high. Now, if you see on a YY basis, it increased by around 5.3%, but when compared to month-on-month basis, it was down by around 1% Now, this growth on a YY basis was driven by diesel, petrol, and ATF, that is aviation turbine fuel or jet fuel. Now, the diesel consumption in the month of Feb increased by around 7.5% compared to last year to around 7 million metric tons. Petrol consumption was up nearly 9%, while the ATF consumption jumped nearly 43%, and this was on the back of recovery that we are seeing in air traffic in the month of Feb. Now, demand was strong for petrol and diesel despite the fact that the fuel prices have been undervised and the Brent crude prices have been lower. Now, this is positive for the Indian Oil Corporation, BPCL and HPCL, because these companies are not only oil refiners but also oil marketing companies. Now, the gross marketing margin, if you see, that is what an oil marketing company earns from selling every liter of petrol and diesel. Now, that has increased for diesel to around 0.5 rupees from a negative 7.1 rupees that we had seen in the previous quarter, and for petrol, if you see, it has come down a bit to around 7.8 rupees from 10.3 rupees that we had seen in the previous quarter. But despite this, it is positive because diesel consumption is very high for the oil marketing companies, and on that side, if you see, the margins have turned positive to around 0.5. In fact, if you see the latest margins for diesel, they are trending at around 4.2 rupees per liter, and for petrol, it is stable at around 7.5 rupees. So this is positive for the oil marketing companies. Now, a sensitivity analysis shows us that if the blended margins of petrol and diesel increases by around 1.5 rupees per liter, then it positively impacts the consolidated EPS of IOCL, BPCL and HPCL in the range of around 29 to 42%. However, despite this positive, we have seen a decline in the share prices of all the 3 oil marketing companies in the last 1 month, and this could be on the back of a possible rotation that we are seeing within the energy stocks, because in the last 1 month, though OMCs were down, oil explorers and gas companies were higher in trade. Along with this, the dividend yield or the dividend support coming in from the oil marketing companies have been lower in the last 1 year, and that is because of the losses that they have been reporting. Along with this, there's a weakness in gross refining margins. That is what the oil marketing companies earn from refining every barrel of crude into a refined product. Now, that has declined from around $10 per barrel, the average that we had seen in the month of Jan, to around $7 per barrel in the month of Feb. Along with this, given the fact that general elections are coming in, and even in past we have seen that whenever there are general elections, the marketing margins of the oil marketing companies get compressed. So this is one fear that is there in the street, and the oil prices have continued to remain volatile, which is also one of the factors that have been weighing on the share prices of the oil marketing companies. However, the current news is kind of positive for the oil marketing companies that we are seeing.
Well, it's that time of the show when we get you most stock-specific action. We have all the brokerage notes coming in this morning. But before that, let me bring to your notice that the SGX Nifty is down almost 143 points, and all the Asian markets are in the red. Expect a rather somber start to our markets as well. We had a weak global handover coming in anyways. But we will take you through all the stocks that you need to watch out for in today's trading session. We have all the brokerage notes, and for that we have Amakshi in the studio. Mamakshi, hi, good morning. You have all the brokerage notes. Tell us what are they saying this morning?
Well, absolutely a very good morning to both of you all. Let's first start off with Bharti Airtel. We have a note that has come in from Jefferies, and what they're highlighting is that they're seeing share gains among 4G users. That is in turn driving their ARPU. The tariff outlook is also seem to be improving, and in fact, they believe that Bharti Airtel is an effective duopoly in the works. The risk reward for the share is also turning quite favorable, and on the back of all these positive factors, they've gone ahead and upgraded the stock from hold rating to buy. They've in fact also increased their target price from 850 to 900 per share. Apart from that, we also have ITC on our radar. We have a note that has come in from Motilal Oswal, and what they're highlighting is that the earnings visibility for the company continues to drive its outperformance. The cigarette business outlook is looking quite healthy. As far as the other FMCG segment is concerned, the growth momentum remains quite strong, and in fact they expect better times ahead for this segment. The outlook for the hotel business is also quite bright. So given all these positive factors, they've maintained a buy on ITC, target price of 450 per share. And lastly, we will be watching out for Chemplast Sanmar. We have a note that has come in from Axis Capital. PVC prices are seen recovering, and the import dependence on China is also seen reducing. Recovery in PVC ethanol spread is also aiding quarter-on-quarter improvement in paste PVC margin. They're in fact expecting the EBITDA to nearly double from FY23 to FY25, and given all these positive factors, they maintain a buy rating, target price of 600 per share, which if you see from the current market price implies a nearly 50% upside.
Well, thank you, Amakshi, for all those details. Moving on, now, infra companies would remain in focus on the back of the positive commentary coming in from the recent management meet. Now, the managements of GR Infra, KNR Construction and HG Infra met in Westtech Broking, and Lisa is joining us to give us all this detail about the key highlights that have come out from this meeting.
Well, yes, road infra companies is expected to be in focus, the likes of GR Infra, HG Infra as well as KNR Construction on the back of the note which is out by Investec. The NHAI order that remain, the pipeline remains healthy as in March 2023 they are expected to award road projects worth rupees 1 trillion, and they also see the likelihood of the NHAI ordering upfronting its FY24 ordering on the back of Lok Sabha elections in the first half of 2024. Talking about segments, HAM segment is expected to see easing competitive intensity on the back of smaller peers as they face funding constraints. Also, all companies are looking to diversify into other segments. And talking on the margin on the newly orders, that is expected to be slightly lower. However, the pricing discipline is expected to return. So that is the word coming in from the management takeaways from these road infra companies.
All right, thank you so much for that, Lisa. We'll move on now. Max Healthcare and KKR and company have initiated separate discussions with TPG to buy care hospitals after earlier frontrunner Blackstone pulled out due to a valuation mismatch. This follows a full-blown auction process that ran for several months, drawing interest from Temasek-backed Shares Healthcare, CVC Capital, Carlyle and the Ahmedabad-based Torrent Group. The valuations have dropped from the original 7,000 to 8,000 crore rupees asked to 7,800 to 6,000 crores. Now, among the largest hospital chains in India, Care Hospital has a predominantly southern India footprint, which gives Max the chance to become a pan-India player. The 2,400-bed hospital chain is owned by TPG growth platform Evercare. KKR divested the last of its 47.2% stake in Max Healthcare Hospitals last August.
Well, with that, it's a wrap on this edition of Market Cafe. Thanks for tuning in. Stay tuned to each other.